JB here. Hope everyone's doing outstanding. Thursday, December 4th, 9/17. Really quick rant, talk about the market. Some names I'm looking at go from there. S&P into the green, was bouncing around this morning. Actually, it's kind of flat here. I don't have the ES. Oh, it's about 0.2%. It was red a little bit earlier. I guess at 8:45 or so, reports out or 9 o'clock that Meta Zuckerberg's going to kind of put the kibosh on this metaverse thing that was supposed to be the Web 2.0, whatever you want to call it. So I guess cost cutting, who knows what that is, but Meta's going nuts. I don't know if that's some of the reason futures are up a little bit. You had weekly jobless claims come in worse than expected. Well, not worse, better than expected, right? 191,000 jobs versus a 221 job loss estimate. So better than expected. To me, you kind of almost want to see just a little weaker data to give some ammo for the Fed cut rates next Wednesday. The thing with the rate cut now is like a 90% probability the Fed's going to cut rates. To me, you got to hope they cut rates. Otherwise, I think markets will be taking on the chin. Chalk yesterday up to another one of those events, right? A couple months ago, it was Oracle losing $100 million a quarter renting out these Blackwell chips, NVIDIA's Blackwell chips, or whatever that story was from the information. Fast forward 2 months later, yesterday at this time, I'm on the rant, and it's Microsoft is cutting back goals for the salespeople on some of their AI products. Whatever that little spin is, or whatever. Again, another article from the information. It's just, and then later yesterday, Microsoft came out and refuted some of that article. Whatever it is, it just shows the kind of sensitivity around the AI space, and any kind of headline that shows that maybe the bubbles. There is a bubble, A, right? Number one, there is a bubble. Two, that the bubble may be bursting, and the timing of it, and then all those different factors there. To me, I just sometimes you got to have almost like blinders on, because it's very easy to get sucked into all these different pieces that you think this is it, right? I put on the watch this morning. It's almost like good to have these little news pieces come out, because if it is a bubble, it's like, how can it be a bubble if everybody knows we're in the bubble, right? And there's always, so that's kind of like my argument, that even if we are, maybe if something does happen, the pull's not going to be as severe as one might play it out to be, like the Michael Burrys of the world. All right, that's kind of quick overall markets. Yields, which were actually going up a little while ago, have reversed. So those are heading back down. Hopefully those head back under 4%, at least a 10-year. And the good thing yesterday was the small caps. And take a look at these rallies, right? I think 7 of the last 8 sessions for the Nasdaq in the green, or 8 of the last 9. S&P 7 of the last 8, and the small caps IWM up near that 250 threshold. So good stuff. All right, so that's kind of quick on overall markets. 679, 683 on the SPY I've been talking about. We're at 685 here. Maybe 686 I had as resistance yesterday. We'll see if we can get through that. And then all good stuff, especially considering the big sell-off we had and the reversal. Nice to see consolidation the last 2 days. Maybe we get all-time highs the next week or two. All right, that's overall markets. Now just quick on individual names. SERV Robotics finally heading in the right direction. I got those December strikes again last week. I might have got them last week. Then you had reports out yesterday that the the current administration is going to do some executive order in regards to robotics, whether it be who knows what it is. You don't know all the details. All it is it's similar to what happened to the electric vehicle takeoff and landing sector and the drone sector a couple months ago. It just means stocks go higher in that sector. So, sir, we kind of just need a kick in the butt, whether it be an analyst or some other kind of news. That's kind of I wouldn't say best case scenario, but it kind of like got the ball rolling, and hopefully the ball keeps rolling downhill here, and SERV can keep going. December 12th strikes. When I got the calls, I wanted to close. I wanted to get the 19th, but the December 12th, the strikes had a better risk reward. And then sure enough, get the rally yesterday. And I didn't want to be in a spot like if you had told me I could get out for 75%, I would have taken that on Monday, right? So that was kind of the rationale. And then I was thinking I was going to get some later dated strikes. So today we'll see if SERV can hold $12 here. The 50-day moving average is 1227. So if it gets up there, it was up there in the pre-market. Maybe I'll look to get those March strikes. I still have the January 15s. Those are up 60% or so. So I'll just continue to hold those. The thing is, the shorts are stubborn. So you can't rule out that they reversed the entire gains from yesterday. I would hate for that to happen, right? But it's reality. If you've traded SERV and watched SERV over the last year and a half, or the last 8-10 months, however long I've been trading it, I see, when I look at SERV, I see it's a 25 plus stock. That's obviously the market hasn't priced it like that yet. So I see opportunity. But then on the flip side, you have shorts who think competitive concerns, all these other things make it a zero. So because that creates opportunity. All right, so that's SERV. DEC, nice rally yesterday, up 3.5%. Disappointing because the premiums didn't move up as much as I thought they should. At times, my calls were 70 cents on the ask. I tried to put them up for a double, couldn't get a fill. And then, of course, pulls at the end of the day. We'll see what happens here today. I'm going to continue to try and get some off to cover cost. I was hoping for 100%, might not be able to do that. So we'll see if it holds gains at the open and rallies and I can get them off for 100%. I will. If not, I might look to take some of the strikes off to cover cost, ride the rest. 50-day moving average 92.25, so good sign there. And I think there's going to be a theme of these names that have like a 6 to 8 week window of bounces and rallies into the start of new year. Deck is one of those names. And then RH, right? I was staring at RH all morning trying to get some spec lottos. A couple reasons. Obviously, I keep talking about the names that are sensitive to yields. Pool is one of those, RH. And then it's like a breakout. And this name is another name that's been oversold. I think it's down 60. Actually, I have to see how much it is down year to date. It's at least 60%. But premiums tend to be a heck of a lot more expensive than they were when I was looking at the strikes. So at first I was looking at 180s and 177.50s and 172.50s. Got those 175s. Going to be pretty much a hero or zero trade. So even if those close red today, I'm probably going to hold them into tomorrow. But I think it trades north of 174 in the next coming days, hopefully before Friday expiration. So that's that. And of course, like I typically do with lottos, I'll lock some in on the way up. CAVA, kind of disappointing to watch CAVA yesterday. Lock those 53 strikes in only to watch them be up 1,000%. Kind of stinks, right? To close them out for 200% and then to see it go up to 1,000%. I mean, sense my sarcasm a little, just disappointing. And I was looking to get the 60s for the December 19 strikes as opposed to holding the weeklies. Give me some time. And then sure enough, this morning, you have Truist initiating with a buy in like a $66 price target. I don't know what that's going to do with the stock. If it holds up in the morning, finally might pull the trigger. I might look for higher strikes instead of 60s. Pool looking great yesterday, all the way up into the 650s. I mean, not 650s, excuse me, 250s finally. And then just couldn't hold the gains. Like 1030 was the highs. Similar to Deck. I had the calls up on the ass, the 260s to cover costs for 100%. Couldn't get a fill, and then it just sold off. And it's not the fastest mover, so it's like a $3 pull. Still like this one for a move. Take a look at the pinch. The pinch is still in the early innings of pinching. So good sign here. Not going to add any more strikes, but you have to think at some point this one takes off. Again, that's another name down substantial year to date. Reddit frustrating here. Typically when Reddit starts to frustrate, that means it's time for a big move. Take a look at his trading range, 220 to 225 yesterday. That's like historically tight trading range for Reddit if you watch Reddit. So hopefully find some footing here today. Again, still similar story. Like I'm not looking to close the last of my 235s out because I need to have another strike. So I need to have the skin in the game just in case there is some kind of news. So I'll just continue to hold the last few of those. And then other names, still watching Coin and Strategy, but I'll probably just sit on my hands there. And I think that's it. Biogen, all the way up at 182 yesterday, pulled back, still have those calls into the December strike, so I'll continue to hold those there too. Oh, and then last but not least, SanDisk, right? I had on a watch list yesterday. I don't know if price discovery has run its course, and now this is kind of like, is it fair? Is this where it's going to be valued at 190, 200? That's a possibility. So the price discovery phase may be over, which means trading the options on it is probably not going to be as lucrative, but I'll still be watching. This could just be another calm before the storm. And that's it. Let's have a great day. I'll be back on audio later. Rock and roll.